All right, okay, welcome everyone to this wonderful, exciting edition of the Master Mentors interviews, right? And today we have Mr. Ming, right? I think some of you might have seen him before. He's around. If you're on Telegram, right? If you're on Facebook, you should have seen Ming around. But Ming, before we get started, thanks for being in the interview, right? Could you just share a little bit, right, about yourself, your story, and how do you get to where you are today?
Hey everyone. So my name is Ming, and I would say I'm a full-time investor for a few years now. And while my journey, in terms of my investing journey, it started like way back. I think I started investing more than 10 years ago. I didn't really remember exactly. It's not like there's a certain point where I exactly started, but I started to have an interest in investing since young, I would say, like since secondary school and all that. But I didn't really, like secondary school investing is not the most important priority in my life back then. So I was just like, it's at the back of my mind. But after I go to army, uni and all that, I started to, begin think about like my life and all that and think like, hey, investing is really serious thing. Like I need to get this part down. So I really started investing perhaps in uni, all right? And I would say that, like I could love to share that, once I started and everything was rosy and coming a lot of money, but that was not the truth. Yeah, so when I was in uni, I actually lost more than like 200,000 USD actually, like investing or what I thought was investing in like not, I would say not really good companies which never really recovered from the financial crisis. Yeah, so after that, over the years, and during that period, I got a bit disheartened actually. Like losing such a big amount was really painful for I was relatively young back then, and for a university guy, losing 200,000 was not an easy thing to do. So I was a bit disheartened. I was like, okay, fuck this shit, put it aside, and then do other things. But after a while, I got back to it because I realized, hey, in my life, right, if I don't really get this part down, like if I don't know how to compound my money, my wealth, consistently, then I will forever be stuck. You know what I mean? And like Singapore, I would say most of you guys watching this might be Singaporeans, and in Singapore, the cost of living is so high. So if you don't find a way to, like grow your wealth on the sidelines, then might not be the best thing. So I got back to it eventually, and I thought, hey, I failed one doesn't mean like I lost money before, doesn't mean I need to keep losing. I can always get back in. But this time around, I got back in, like knowing the mistakes I made and trying not to repeat the same mistakes. Yeah. So over the last few years, I think I have quite a consistent framework, and over the last few years, I focus more on growth companies. Right, that is where I think the returns are.
Yeah, I love what you said, right? Like, yeah, you lost $200,000, which is not a big, not a small sum, right? But you still decided to get back up to keep going. And right now, if you imagine if you haven't, right, where like your results, I think some of the people know, some people watching might have known, right? It has been quite pretty extraordinary. And right now, you're into doing growth companies, right? Plus using options, so that's great. We'll talk more about that a bit later. So in your experience, right? I think one thing I love about you is you're very open to learning, right? You attend different programs, right? And you implement it based on your own proper framework, right? So just want to share like right now currently about how many students do you have at the moment? Because I think you started accelerating your branding, your movement really during this whole COVID period. So generally, how many students have you been teaching, and how have they been like so far?
I won't consider myself like really like a guru or expert teaching. I just like to share about what am I doing, like, and some of the stocks I'm investing. If I can share, and it can help anyone out there, why not, right? So during COVID, like some of you guys will know, the market kind of tanked, like crashed during March and all that, February, March. And during this period, there are a lot of people who were like a bit lost, like they don't know what to do, especially those who are invested or those who was waiting for the best time to invest, like now's the time, but they didn't know like what stocks to buy. So that was where I actually started a Telegram channel, and I started to share some of my thoughts, like why you should buy now during the March-April period, and then what kind of companies that I personally am investing in. Yeah, something like that. So I think in the Telegram chat, there's like I think 2,000 plus people, but I would say those who actually like sign up my program, maybe a few hundred, like 500-600 people. Yeah.
Okay. Yeah. So generally, how I think based on your what you have seen in the chat group and channel, like how have some of your students been doing, right? And hey, yeah, I think also be good to share a bit about your strategy, right? Because in my take, I think it's one of the you combine the best of a lot of things, right? So you want to share a little bit about that as well?
So I think like investing is always like how to say it's always you're always adapting to what is in the future. So a lot of people look at investing and they judge it based on like for example, like Benjamin Graham, Intelligent Investor, right? Like this, I think it's one of the all-time classic favorite investing books. But if you use some of the like formulas listed in the books, it might not work in today's world. You know what I mean? So like, we are always, humanity is always evolving lah. And some of the investing stuff have to evolve also. So I also learned from like different school of thoughts, like value investing, growth investing options. And at the end of the day, it's like what can give me the best return for my risk appetite, right? That makes sense. So over the last few years, I feel that growth investing is the way to go. That means investing in companies that have a lot of growth potential. They might not be profiting now, right? But that's okay because, like for example, when Amazon first started, right, it wasn't about profit; it was about grabbing the market share. We call it land grab, right? Grabbing the market share, right? And right now, look at Amazon. But throughout the last 20 years, as Amazon start growing, a lot of people still think, hey, Amazon is too overvalued, it's not profitable. But because perhaps they don't understand the business business model well enough, lah. Yeah. So I would say, yeah.
Yeah, I would love to dig a bit deeper because like the thing is a lot of people can attend a lot of investment programs, read a lot of books, right? But ultimately, right, I think one thing that was great about you is that you develop your own principles and framework for your own investing. So how would you advise the majority of investors out there, right? Because I'm sure you've seen a lot of investors that typically they just follow the crowd. But really, if you want to be successful in the long run, not in the short run, right, you got to have developed your own framework and to become an independent and responsible investor, right? So how would you share? Because I think that's something that in terms of your growth, right, you have to develop your own framework, your own conviction. So how do you advise other investors?
I think for me, I focus more on qualitative. That means on the business prospect than the numbers itself. Like that means whether it fit into some formula or P ratio and all that. So especially with COVID, right? I think COVID is a game changer for not just our lifestyle, but also in the investing world. So post-COVID, right, I'll be looking for companies that will thrive in the post-COVID era. That means not just great companies that will survive, but will excel and will do well in the last few months and also in the years to come. Yeah, so that's one of the criteria that I look for. So for example, this is just obviously my personal opinion and not a recommendation to do anything, but I would say a lot of those traditional great companies like Nike, Disney, Starbucks, right? They might not be, I mean, they are good brandings, right? But they are not exactly very well positioned to thrive in the new world, right? So there are better companies out there. So one way I can, not say recommend, but I can say like anyone watching this, right? You can just take a look around you. What are some of the companies that are growing well? I think in local context, a company will be like Shopee. Like you realize like that more e-commerce, more people are buying stuff online. And I think Shopee in Singapore is winning, or in Southeast Asia, they are winning the
whole e-com game.
Yeah, correct. So Shopee will be under a parent company called C Limited, and it's one of the companies that I personally am invested in. Yeah, so I think like look at which sectors that will do well. Like obviously e-commerce, digital payment. These are some of the companies. So for example, you talk about digital payment, then you can think about PayPal. I think PayPal is big enough. Everyone knows PayPal, but also like I would say they are solid cash cow. They are big enough, and they are just churning. And if they are just growing at a consistent 15-20% right now, I think that's not too bad. For investor to get started. It's an easy company to invest in, and these are some. So you can think from a perspective of what industries or which sector will do well moving forward for the next few years.
Yeah, I love that. It's a huge reminder, right? To a lot of people that like it's not like investing is not like some numbers on a scoreboard, right? Because I think it's really about looking at proper businesses that will not only grow well as a business, but even the sector grows well, right? It's like a double win, right? When you choose a company. So I was just curious, like if you go just a bit deeper, right? Like, so how would you personally recommend newer investors, right, to respond when the stocks they've chosen, maybe it's good, right? Maybe they've chosen good companies, right? But it has gone down a bit, and especially let's say if you use options, right? The losses can be a bit more drastic. So how do you recommend like a new investor, average investor starting out, right, like to really build that conviction that even if it goes down, right, that I'm okay with it? Like any tips, actionable tips or mindsets they can recommend?
A few general guidelines. I would say it's beginner. Maybe don't touch options first, because the options is a double-edged sword. With options you can make. It's just like if you're driving a car, and the option is like a booster. Like you watch the
nitro
movies, then you just go straight. But you realize they don't turn on the booster throughout the whole race, right? They only turn on the booster usually towards the end when there's a straight road ahead. Right. When So if you think next. So in general, I would say like for beginners, if you just learn how to drive, maybe you don't want to touch that the button first, right? Just drive normally. That means you just buy and hold the companies to touch options for a while. So I would say one of the questions you ask yourself is like for example, if let's say Facebook, right, or PayPal, if the share price were to drop 30-40%, on the assumption that the business have no change, but because simply what is going on out there, like perhaps a second wave of COVID or Donald Trump, some news or whatever external factor out there, but that does not really affect the business fundamentals per se. But in the short term, the share price drop. How will you feel? Do you feel like, oh my God, it's time to panic,
Yeah.
why would share price drop? But you realize stock market, right? And one of the things why is it so interesting is, you cannot really predict what is the price going to be tomorrow or next week, but it also presents an opportunity because if next week, right, if because of whatever news is out there and my favorite company, let's say PayPal, were to drop 30%, then present me a better opportunity to get in more at a lower price. So one way investors can do is they could set like different tranches, like different price to go in. For example, 3 tranches, and one could be at whatever price it is right now, and the second tranche could be like when the market drop or your company drop like 10%, you enter a second tranche. This way, you're always entering at a 10% discount, right? Your second tranche. Your third tranche could be at a minus 25% drop. Right? So it's a bit of more into like portfolio management and all that.
Yeah, I love what you do because like you anticipate that it could possibly drop. So instead of like you buy and you hope you'll go up, right? You actually you actually make a plan, right? Which I think I observe. I think you might also know like most investors they buy, they just hope you go up. But what you do is you have a very systematic plan. I know in some of your trading videos you show about like your limit orders is a whole stack of limit orders to prepare for the market drop. So I think that is very important and it makes a lot of investors clearer and more confident, right? When they start investing.
Yeah, so I would say that would be a more mechanical system. Mechanical means you take emotion out of it, because as investor, like human beings, we have emotion. I cannot. So in the past, I used to try to suppress my emotions. But I think over the last few years, I began to accept that, as investor, even with me, I also have emotion. But it's about accepting the emotion, but not letting the emotions affect my decision making, my rational process. So how I do that is like, you just simulate what's the possible outcome. When you buy the shares, right, or they only go 3 ways. One, you go up, sideways, or down, to put it simply, right? So you just think of the 3 scenarios before it happened. Like for example, if SCF want to plan for war, we need to think about the scenario before we prepare, right? So we prepare. So let's say I buy today, tomorrow it drop 30%. What is my plan? Do I buy more? All right. Do I cut loss? Do I do nothing? Based on what? What is the, like, if I'm cutting loss, what is the rationale for me to cut loss? Does that make sense? Yeah, so I have a contingency, any potential rate flags.
Specific plan, right? Like I think that's damn super important. So I think right now you say about 500, 600 students, you have about 2,000 people in your growth corporate chat, right? Like actually, so in your observations, right, what do you think are some of the characteristics and traits of some of the most successful students, right? The people that have been crushing, achieving high returns versus some, right, who haven't been maybe achieving the kind of results that they want, at least based on your own observations.
Oh, that's a really interesting question. So I would say those who achieve the best result this year, so some of them actually, double, triple their portfolio, like 100, 200%, and we are not even, we are like 2/3 through the year only. I would say they follow the strategies closely. They do not deviate too much, and they do not do fanciful or funny stuff. So I think in this day and age, right, is where we live in a digital age where information is everywhere. So it's about how to be, and every day there's new shining objects out there. It's how to be, I would say, not the best word, but how not to be seduced by every other thing and trying, using my portfolio and trying like for example, if I just learn how to drive, I don't want to get from point A to point B. If I drive slowly, I will get there, right? Maybe slow, but I will get there. But if I'm trying new stuff like how to drift towards this corner and all that, when I'm a beginner, do you realize how that might not be the... So sometimes as investors, as beginner investors especially, it's about knowing oneself, about knowing my strength and weakness. Okay, I know like today I am not the... I'm still learning, I'm in green, I'm new, that's okay. But I want to keep things simple first, right? So, I would say, especially for Singaporeans, sometimes we like to learn like, overly complicated or advanced stuff, which is great, right? It's always good to learn more. But sometimes we also need to know when to keep things simple. And I realized, all the top investors out there, most of them who have like, very, very good results, they tend to keep things very simple. Like just buy good company, just buy and hold for the long term. Sounds easy, like buy low, sell high, or buy low, hold forever. But why, some investors are not able to do it? Because they tend to like sell at the wrong result. For example, recently Donald Trump got COVID, and I heard like some investors actually sold off their companies.
Oh wow! Ouch!
It's like,
oh shit!
why are you selling it? What's the thought process behind it? Yeah, so you really need to think through.
Be very aware and keep things simple. So I think moving on to that topic of keeping things simple, right? I want to talk a bit about options, right? Because you said earlier that if you're totally basic, please don't go and try options. So I think two quick questions. Firstly is when would you recommend like someone to say that they think that is right? What are some questions you think investor can ask before getting into options, right? Whether is it any kind of strategy, right? But I think then the second one is then about the strategy itself. Like there are 1,000 strategies out there, right? Like what would you recommend, right, in terms of the approach when it comes to options investing? Because there's so many things available, at least for you personally.
So for me personally, I don't see options as trading or what. It's something that complements options. A tool, right? It's just like, for example, if I'm writing, this pen is a tool, right?
Yeah.
And if I know how to use it to help myself, I can write lah. But if I don't know how to use it, I poke my own face, right? I can hurt myself also. So what I mean by options is, if you do it the wrong way, you can potentially hurt yourself lah. But if you do it the right way, it can enhance your return. So obviously the line will be, then how do I do it in the way that benefits me and don't harm me?
Yeah.
So I would say, one should always start to experiment with it. So it's not about yes or no, do I do options or don't do options, but how much option to do. So when we analogy will be, let's say I eat nasi lemak. It's not about I eat chili or not. It's about how much chili to go with my nasi lemak.
Okay.
Someone chili, someone eat like totally no chili is fine, but someone can eat a bit chili. So you realize it's a spectrum. It's not one or zero, but it's a spectrum of how much chili. So in this case, it's about how much of a portfolio you are allocating to these options. Like 10%, 5%, 20%, 25%. Yeah. So I would say if you're a beginner, obviously you want to start with a smaller. If I first time eating chili, I will be conservative and just try a bit first, right?
Yeah.
Similarly, if I do option, first time doing a new strategy for me, I would start with a bit on my portfolio first, maybe 2 or 3%, or I could try it on paper account, paper money, and see how to get a better understanding. Yeah.
Okay.
So this is how I recommend someone getting started.
Started.
So that option strategy will complement my fundamental investing thesis, which is growth investing. So how I like to do it is it okay I share one of the strategy?
Of course, yeah.
So because growth investing is you're finding good companies like, let's say, CD-meter, Tesla, Amazon, that in the long run will keep going up. So how I like to do it, I will buy some leap cost on it. That means long-term, long duration cost on it. And if it goes up, right, using the same amount of money, I could potentially make 2 or 3 times. Then I would just hold the stock lah. That's one way to use options to enhance your portfolio.
Yeah, I guess the challenge for a lot of investors, right, who are doing lead calls, I think we know the space, a lot of guys have been doing it, is when I think even 2018, right, a lot of people buying options, and then the market, there was a slight dip and people started panicking and selling off their positions. But actually if you held it, right, especially if you bought a longer term, right, you would have been totally fine, you would have been profiting. So like I know we touched on a bit about it earlier. Like, do you structure a portfolio anyway to make sure that you don't get so emotionally affected, or to make sure that you don't get the huge brunt of it, in case some people might think that, oh, Wirecard is a great company, right? But if I bought a call, Wirecard, I would be dead by now. So like any like tips or strategies for some of the investors out there when it comes to managing some of their option strategies?
Don't have to. So firstly, right, don't have a huge portion of your portfolio on option. So for myself, I do not have any point of time, right? My max is maybe 20-25%.
20-25.
Yeah, so 75% will be, that means if I'm fully allocated, that means 0% cash and 100% allocation. I would say 5 to 80% is like buying and owning the actual shares, and maybe only like 20, maximum 25% on options. Yeah, but my usual norm will be maybe 10 to 15%. Like right now, when there's some volatility in the market, I'm obviously like lowering the percentages up. Like for example, let's say I'm driving ahead, and if it's a clear road, like after March, the crash, right, it was good opportunity. So if I'm anticipating like April, May, June, July, it'll be an upward move, I can increase the option allocation to churn the return. Right now, like market's on the high, and then we have this election coming out, Donald Trump just get COVID. When I expect some volatility, that is like you're driving and you anticipate a bend a curve in the road, right? What are you going to do? You will slow down, right? You will slow down the car, and you're not going to stop the car or even move behind. You're just going to slow down,
be a bit more wary. And
so in terms of portfolio allocation, that means reducing the options allocation, the percentages. So that is one way, and only do the options, or let's say in this case buying costs on options on the companies that you think have the best growth or your highest conviction companies. Don't do it because when the market starts to tank, usually the companies that you have the most confidence will be, your top 3. Let's say Oh, yeah. So you want to do the options on ideally the best growth companies and not just, today you just heard about this new company because your friend gave you a tip, you never do the research, then you buy a call option on it, and then market tanks. That is like, you will be in this, you don't want to be caught in this space where, am I doing the right thing? Should I cut loss now? And you're thinking this because you lack the conviction in a company in the long term. So don't get into that place in the first place.
So like, really build the conviction. If not, you won't be able to sleep soundly at night, which is what I hate. I love to sleep soundly at night.
So a good tip would be like, let's say, investors in their watch list, there could be like 10, 15 companies. One way could be you filter through these 50 companies and ask yourself, hey, if you gun to your head, if you can only choose 3 companies, which are the 3 or 4 companies that, you will choose? And that should be ideally your top tier conviction level companies.
Okay, great. I love it. Yeah. Guys, for those who are watching, these are really very like actionable tips, right? Really means very direct, which I love. So you really can use a lot. Like you can take away a lot of things and just implement it for yourself right after this interview, right? So I just want to ask one more quick thing about options, and then I'm gonna move on to another quick topic, which is so what about like bear call spreads and like iron butterfly condos? What are your thoughts about it? Like, do you use it or
also like, experimented, all these complicated ratio spreads and anything about option? I kind of been there, done that. I would say, so I went one big full circle and I realized for the effort I'm putting in, the results is very like it's not worth it and it doesn't really enhance my returns that much. And also it depends on my lifestyle. So I come to a stage where I don't look at the charts that much. I don't want to be stay away when the market opens. So I just want to keep things simple enough, and yet at the same time can give me like good returns. Like if this year I can triple my portfolio, just doing simple things, then I think I'm okay with the results. So I'm not a big advocate of doing such
all this
complicated. If it's like for a certain, like for example, you're doing some hedging strategies, that's fine also. But to keep it simple, like I always tell my students, what's the best way to hedge? Not by like buying puts and all that, because you are paying a lot for the puts, like you're buying insurance, but rather you can have a higher amount of cash percentage. So for example, if you are usually 80-20, 80% position and 20% cash, and then 20% is like waiting for some kind of job to enter. And right now, if you think, because elections coming, about this, you don't know what will happen now. You're a bit fearful. Then that's great. That's okay. It's totally perfectly okay. Just change the allocation. So instead of 80-20, you go like 70-30. That is a hedge in itself also.
Cash.
A bit higher cash percent. And that is easy. This hedging is free also. Then the best way of hedge. So why not just do that? So for me, I like to keep things simple.
So when you talk about hedging, I'm like, that's true, because recently the market went down and everything, right? I just had cash, I just bought it and I just went back to sleep. So I love it, right? Like instead of like, okay, like the boost, I mean during the March time, I do agree they made some quick serious money, but right now, at least in my take, right, I think right now, so this interview is about 2020, it was October, right? Like, okay, it's volatile, but I don't think my take is likely never going to have such a huge crash like March, who knows? But even if it happens, right, even if it does, I still have cash to just buy over, right? So it's totally,
I think that's a very good strategy. And also I think my bias come into play. So maybe as a disclaimer, I have to share that because I don't see a bigger crash. I don't see we are going to as low as in March. So I see perhaps this is just my personal opinion. I think the next drop could be maybe another. Right now we have about 10% from the high, so we pull back a bit, but maybe another 10-15% drop, and that should be the max. So because my bias is I don't expect such a big drop, so I'm not thinking too far about like buying puts and all that. I'm trying to capture the downside. I'm just waiting for it to drop, to go in at a lower price, to enter my remaining bullets, and to capture the next bull run to come.
The potential upside, right? Which will very likely to happen in the long run. So we'll move on the topic to a little bit, just to touch on about this thing called technical analysis, because I know you also say that, hey, I don't really like it, right? But definitely you have some pretty solid technical analysis knowledge and experience in your space. So what would you recommend the average investor, right, when it comes to technical analysis? Should you learn options first and then go TA, or what are your general recommendations and your thoughts about people who want to go?
Beginner, right? I would say, so this might be an unconventional or not a recommendation that people would like to hear, but my advice would be don't really go down the rabbit hole of TA. I mean, if you have some simple lines like your 20-day moving, 200-day moving average, I think is okay, because everyone look at that. But don't really go down too much into TA, especially like too short-term TA. That means anticipating what the next, because the whole thing idea with investing is the longer the timeline, the more accurate you can be, right? That means I know over the next 5-10 years, the stock market will definitely be higher than where it is right now. But if you ask me tomorrow, the market will open up or down, is 50-50. So you realize the longer the timeline, the more accurate or higher conviction, then why not I play a longer duration? I'm not going to play in the short-term duration where, I don't have an age there.
Yeah.
So why do I want to play in that space?
I love it.
Avoid the TA thing. Just focus on because you buy the right companies, right? It's a matter about at the most you buy them at a slightly higher price, right? And like for example, let's say a company like Visa, year they just grow at 20%. Even over the last 10 years, you choose the worst possible time to buy. That means the highest point. You still do well, a long period of time. Then why not just do that?
Yeah.
So you see, you have a winning strategy out there already. Then why do you want to focus on something that might not give you like a better than 50% chance of winning?
I like what you said, because you see, like, even a company like Amazon, right? Imagine like years ago, right? It was, for example, you want to buy at $200 and then actually somehow it popped up to even, let's say $300. But if you miss, like the thing is, if you didn't buy it, right, you wouldn't have got upside. Right now it's like $2,000, right? So sometimes people just nitpick on the dollars, which I've experienced. I've done it myself. I've seen a lot of friends do it even after like a lot of like encouraging advice. Because of that $1-2 they miss out, and because of that they miss out a lot. Okay, so I definitely know what you mean.
Saying make famous. I think Warren Buffett or someone. Don't be like penny wise and pound foolish. That means you nitpick the small thing, but you miss out the big picture. Which one more important? I think the bigger picture. So even I pay $300 for Amazon, I buy the worst possible. I buy like 50% higher than you because you buy 200. I buy 300. Okay lah. I still turn out well for. So the whole idea is to do that. I need to make sure I pick the right companies and just allocate well among like 5-6 companies. You will do well in the long run.
Yeah, and I think sometimes that investors miss out this point that actually even when Warren Buffett was managing a multi-million-dollar fund, right, he didn't go invest in like 20 companies, right? Actually invested in just a few companies, right? 6 to 8 maybe, right? And probably even less for a quick long time. So sometimes don't have to go and think about 10, 20 companies, right? Because you also diversify away your time, right? And you're not focused, right? So which also brings me to my next topic, right? When it comes to about building conviction, right? So I know definitely for you, right? You are experienced, so you kind of know how to get about doing it, right? But let's say you're an investor, right? And the person asks, how do I build conviction in a company? Well, there's so many things to read about it, right? You read about the finances, the company website, YouTube, Facebook, like what might be some of your first few actionable steps, right? When, for example, this guy wants to analyze a company, like for example, let's use, I'll just say Tesla, but let's say Visa, right? Let's say Visa, right? I think it's a bit more standard, right? How would you advise newbie investor to like really build that conviction of saying, okay, I think Visa is the way to go?
Okay, so looking at this from the perspective of a beginner, I think for a beginner, one easy way to get started is, perhaps watching YouTube videos. Because like YouTube videos, like there's some investing YouTubers out there who can able to present the financial data in a very not so boring way, like more exciting and like more pictures and all that. But it's still good lah. You learn something. So this is one way, and the videos are like very short clips, maybe 5-6 minutes. So it's very easily bite-sized, digestible. You like on the train to somewhere to town, you know what I mean. You can just watch, consume, and then so conviction is built not like overnight, but like over a long period of time. So let's say one day you consume one Visa video, you understand a bit more what Visa does, what is their main business segments, what's their growth drivers, how fast are they growing at? So this one way. And then another way will be like learning how to read the financial information, make sense of the data. So there's different ways to do it, but I would say for a beginner, one good way to get started is watching YouTube videos. So how to get started? Like for example, if Visa, right, is a company, then I just search Visa investing. Or I go YouTube and search, and then top videos will come out lah. And then you just click and see. And that's one good way to get started, because when you watch the video, sometimes the YouTuber will talk about other companies also. That will, as an investor, right, you will increase your awareness of what's going on out there. This is how you can spot the next company also.
Okay, so I think really I think it's two very simple tips, right? Firstly, I think watching YouTube videos, and then secondly, like just get to read, learn how to read financial statements. If you're not in accounting and everything, there are very simple videos, I'm sure, that teach you how to read simple financial statements. They can really help you enhance your knowledge and how to read a business, right? So when it comes to YouTube video, just want to pick your brain a bit. What might be some of your favorite YouTube channels that you use for yourself, so people can
check it out? I think So there's a few, and that's great, right? Because you want to have a sense, like input from different perspectives.
Yes.
Some are very like hypey,
Yeah.
and then some are more numbers based, some are more chill, like more factual. So I think one of it that I really like is this guy called Dave Lee Investing. You just search Dave Lee Investing. So he talks about growth companies. You want to find companies that can have a clear path to 10x or 20x in the future. So some of the growth companies talk about is like Tesla, Square, Lemonade, upcoming year and all that. So Dave Lee and Hyperchange is also they focus on growth because I'm focused on growth companies. So the investing, the YouTubers I follow or I watch will be growth companies, growth focused. Yeah. So Dave Lee Investing, Hyperchange, and also solving the money problem. Solving the money problem.
Wow.
This guy focused a bit more on Tesla per se. All right. But the way you evaluate the company is quite interesting also. So you can learn how to, using, it's not about Tesla, should I buy or not, but how can I, using the knowledge that I gain from watching these videos to increase my own investing knowledge and also to spot the next. Because this information is portable, it's not just for Tesla.
Yeah.
For the next Tesla, other companies that I'm assessing, I can use the same checklist or I can use the same, the question that I want to ask myself. Hey, this company have a clear path to 10x. What is the, the obstacles that it may face in the next few years? Yeah, this.
Oh, hey, thanks for sharing, man. So I think right now I only know about Dave Lee. The other two I'm definitely going to check out. The only one, of course, I know. I think we both know is Mr. Chicken Genius, right?
Yeah,
so
yes.
There's a lot of Tesla and entertaining as well. I think when you say entertaining, right, Chicken Genius definitely comes to mind. Dave, Dave is pretty educational, right? So but he's very serious and all. But Chicken Genius is like donkey and everything. So that's really cool.
Yeah, if like locally, right, if like Singaporeans want to, a channel I recommend like by Singaporean, I definitely is by Ken, Chicken Genius. Check it out. So it's one of the videos that I I subscribe, man, I will like chop everything just to watch it when it's released.
No, so for me, Chicken Genius definitely, but definitely I'll check the rest of what you shared out as well. So one last question, I think I'll go general before I will go a bit deeper, right, for some of my audience on like September to like October 2021 to do, right? So for someone, right, who is starting investing completely from scratch, right, probably doesn't have business experience, doesn't have financials, right, for example, right, what would be some of the most actionable steps or your most biggest tips for them to start out in the journey in the first 30 days? Like, what should they do, right? Because there's so many options on what they can do, right? But what do you think the first 30 days, right, investor that's kind of starting out, right, probably a 9 to 5 job, right? So don't have like 24/7 do it, but maybe at night, in the evenings, in the weekends, right, to really jumpstart his or her journey to investing.
Definitely creating an account. I mean, like that's a technical side. Like,
okay, that's number one.
Yeah, because like you can't start without investing.
Yeah, I know a lot of people that sign up for a course, pay $1,000, but they don't sign up. They're like, hey, okay, anyway.
So, you know what I mean? Like it's very theoretical and so you can talk all you want about getting started, but if you don't have an account, and so that's why getting an account, funding the account also, funding account with a proper amount. You don't have to fund it like 100,000 immediately, but I would say a few $1,000s or a few $100s even would be a good amount of fun. And if you're starting with a few $100s or a few thousand, let's say you're a beginner, and I would say your next step will be you fund it with a few $1,000s, right? You probably will not do, at least most Singaporeans might not do like 50K, 100K. So if you're going to do like a few $100s, then you realize also it might be a bit hard to go into different companies, right? So what you can do is investing into ETFs or what we call exchange traded funds. So exchange traded funds are like a basket of all the good companies already selected for you. Like for example, in the US, you can choose the SPY, which is the top 500 companies in the US, or the Nasdaq or the QQQs, right, which is like the top 100 companies. Right. So this is one way to like choose. Like you don't have to choose. Like for example, there's so many good companies out there, like Apple, Amazon, Facebook, Google. Wow, I want all of them. Then how? Just buy the QQQ. It's an easy way. Then you get dollar cost average. So every month you can put in like, or every month you just buy one share. At the first, every month just buy a few shares. Then this is a easy, painless way to get started. But it builds up a good habit. And over time, over the next 3-6 months, as you see your results start coming, this shit really works. Then what will happen? You will get more interested. You will put in more money. And then this is where the snowballing really start to kick in.
Okay, so you say, of course, step one is to open a freaking account, but some people don't fund the account, right? Step two, and if you're starting a bit small, maybe you can enter ETFs first, or even if you're a bit new, you're a bit not so sure. Hey, instead of invest in ETF, right? Especially an ETF, and you know will grow over time, right? So after that, any more steps, like while they're waiting for their funds to grow, right? Any other things you feel that could really enhance their experience when it comes to investing?
The next few steps are like looking at good question. Next few steps. Let's say assuming he started already lah, like means got some ETFs going, account is building, get some dollar cost averaging going. Maybe start to watch more YouTube videos, which I covered before. But I think watching YouTube videos on investing, like Chicken Genius and all that, right? So it's a bit entertaining. So you don't feel like it's so the whole idea is you want to get interested in investing, because a lot of people or some people might feel investing is a chore. Like, for example, for me, going to the gym is a chore. Some people might think like, but and then if you look at it as a chore, right, then it's hard to build the momentum.
Yeah.
Because so the whole idea is how can you get the interest in it lah. Yeah. So once the interest come in, right, then that solves the problem of you like I'm not afraid that you will get disheartened or you will lose momentum. So getting the interest initially, I think, to kickstart the momentum, because we are talking about this is a marathon, right? This is not a sprint.
Yeah, it's a long term.
Starting right is very important. Like if you start wrong, and then if you lose money, for example, I see a lot of people do it the wrong way at the start, and then they lose money, they get disheartened, and they say, yeah, this thing doesn't work, it's not for me, and then they never come back sometimes. So starting right, I think is very, very critical. Don't aim to start fast. Like a lot of Singaporeans, they want immediate results.
Yeah,
I know if I go to the gym, tomorrow I won't get a six-pack immediately.
Yeah.
But surprisingly, when it comes to investing, a lot of people want insane results overnight lah. So they need to be realistic about the returns that they should expect lah. I think that is very setting the expectation right.
Okay. Yeah. So really, of course, get the money funded, right? But really, I think one thing you hone in, which is the part on getting interested. But a lot of people are not interested, right? So I think that's one thing good. Watching videos, you're getting entertained, right? Yes, it helps a lot, right? And then after that, I think talk about like enhancing the mindset, right? Making sure that the mindset is right. So I love that the first 30 days you focus on all this big foundation, right? Not only will you get to actually invest because you actually have the account, but you actually get the foundation right, which can actually bring you success for the long run, not just in the short term one-off profits. Wonderful, right? Okay, so with that, right, I think I share more about the timeless principle. So I just take the next 5 to 10 minutes, right, sharing more about right now the time where we are doing this interview, which is about October 2020, right, about the current market. And also, you just give a quick overview about your thoughts about the market. And yeah, let's get started off with that first.
So I'm not going to give too much predictions, but I think so right now we are in like early October. I see the market. Over the next maybe few weeks to months, I see us dropping down further, like a pullback. I think I mentioned earlier also, additional 10% pullback. But if you focus on long term, the bull run should be going up. I don't see a major drop or major recession affecting our companies. So how I position my portfolio for you, whatever I say. So so this information, how does it make sense to anyone out there or myself? Right, is I will look for the next coming drop. I will think of it as opportunity to enter my remaining tranches. So I'm maybe about 70-80% invested right now. I'm still holding 20% extra cash, just waiting for any drop to come. If it drop, that's great. If it doesn't drop and it goes up, after election and all that, that's great too, because I'm 80% invested. So you realize I am positioned very neutrally. I do not hope the market to go up or hope it will drop because I have not entered. Does that make sense? So I think having a neutral perspective or neutral mentality when they approach the market is very cool. That means it's very important. That means right now I don't really care that much if it goes up, go sideways or go down, as long as the businesses that I'm investing in they do well. I focus more on the business than what is the outlook out there.
Yeah, I love that position, right? Because then it means that any night, right, even the market goes down, right, we get to chill, we still get to do our things. We don't have to really go and look at the markets, right? Well, I think a lot of people are panicking, right? Every time there's a big market drop,
so I think a lot of people are focusing on the wrong things. Like they care more about some election debates, which you yourself you mentioned a few. I didn't watch the debates. I didn't even know what they're debating about, because investing on things, it don't really affect my companies that much. So where should my time, everyone only got 24 hours, where should my time and focus be? After a long day of work, I only got so much time. I want to focus on and compound. I want to focus on things that are timeless, right? Like you mentioned. So if I take the time and read up more or watch YouTube videos about my companies, that information, I'm building up my my level as an investor. If I focus on whether Donald Trump is recovering, for I know he might not be the next president. Does that make sense? So it's like this knowledge that I built up is irrelevant.
Yeah. I love it, right? So, yeah, I didn't watch the debate. I watched the highlights. It was quite entertaining, though. Yeah. So, I just want to ask a bit very quickly about your thoughts on China and will it really threaten US or the positions. I just want to get your quick thoughts about whether will it
Yeah.
cause a
I
devaluation of
think
the
that's an interesting
currency? Yeah.
question.
Yeah.
So I think as an investor, at the back of my mind, I always have, I'm always looking at the US and China.
Yeah.
More like so I'm in a kind of like a amateur fan of history lah. Like, and it helps with investing because if you realize, over the 自古以来, that means since ancient times till now, right?
Yeah.
Every superpower, every country or empire that was powerful, they only last 200, 300 years, right? Like most, right? All the China dynasties and all that. So
Wow.
because before the US, there was like Russia, British Empire, the Dutch Empire, all that.
Dutch,
So
yeah.
US has been going at it for about 100 over years. And
Yeah.
if you realize, the strength of their leadership and all that compared to like China. So I would say China, obviously everyone knows it's up and coming, but I would say the numbers to point out that economically, I think they're doing much better also.
Yep.
And like if you compare the bottom, I think there's some statistics that show like the bottom, the middle class, or the lower 50 percentile of the population of China is actually, their standard of living is actually better than the US, like right now.
Yeah.
So
Wow.
it's a bit scary now. And so recently, I think there was this new Jackie Chan movie, Vanguard, right? So what was interesting about that movie, right, was that they actually dare to perceive the US military in the bad light. That means in the movie, they show that, I'm not sure if this is controversial or not, like they show that, the US the battleship got destroyed by the terrorists and all that.
Wow, like they are the victims, like they are the weak.
Yeah. They are the weak, and then China coming to save them, and then there was the actor in the movie, the hero, like he called it like people saying Captain China is better than Captain America, that kind of thing.
Oh, wow.
It's very subtle, but you realize this kind of thing don't happen. If 5 or 10 years ago, right, no one would dare to do, I mean, at least China would not dare to do a movie,
Yeah.
But now it's like, hey,
they're a bit more aggressive. I'm sure they're more aggressive. Yeah. So where do you see that happen? Like, do you think that will be?
So it will always be, no, there will not be, I don't see like, okay, so there might be an inflection point where, things come to head. So I think from China perspective, it's in their interest to delay any conflicts. That means they prolong the conflicts to the future. It's in their interest because the longer there's, they build up, the more relatively to US, their strength gets better.
Yeah.
But for the US, the longer they delay the conflict, the more they will be not as good. So it's in their interest to accelerate the conflict if they want to do so. So
that's why I know they're trying to like
these tensions and all that. How does it affect us as investors? Is like, for example, I would say right now the bulk of my portfolio is perhaps US based companies. US based companies. Their operation might be around the world in China, especially, but US based. So over the next few years, I'm actually looking, or this is something that I have in the back of my mind. I might shift some of my more of my positions to China companies.
Wow. So that's something you see yourself doing in the next 1 to 3 years?
Yes. So it will progressively. It's not like overnight I go like 100% China, but like over the next few years, 3 to 5 years, I would say I anticipate my own portfolio shifting more towards not just China, but like perhaps Asia or non-US companies. Yeah.
Okay, great. I think thanks so much for sharing openly because I think right now a lot of investors are just thinking that just US all the way. But I think that's a concern that I'm facing as well, which is that like China is coming up, right? And it's a unstoppable force. I think US is just trying to delay the inevitable. So I think that's also a reminder for myself to start looking into China, what sort of companies that I can potentially look at. So moving on. So thanks for sharing about China. So I just hope if you could, right, if you are open to, right, to just maybe share like one or two of your favorite companies right now that you're really looking at very closely at the moment, right? Just to get a sense of your investment methodology and where you come from. And maybe, right, if you can, right, one or two, right, it doesn't be so many companies you feel are pretty underrated right now, that not enough people are talking about it, that you feel that, right, it's actually worth looking at this for potential investment down the road. Okay,
so I think one of the companies that I'm looking at, one of my favorite companies be, some you might know, will be Tesla. Yeah, Tesla. So I think a lot of people are talking about Tesla too. But at the same time, there are still people there's some people who don't see the potential in Tesla. They say, it's not profitable. It's just a car company. It's just
overvalued. That's the one big word, right?
So how I see it is, I think like Tesla, the thesis is they do so much more than producing cars. It's a software company. It's an energy company, and the energy market is like so big. Like, so if you believe, and how I invest is also how I see the future. So if I see the future going into more clean energy, less pollution, all that, then I think Tesla is at the forefront of all these changes to come. And if you look at their technology, they, in terms of their cars, right, their specs, they have some of the best specs, not just for electric vehicle car, but across the whole auto industry, right? And if they can, and right now they're reducing the cost of their cars, the batteries and all that. So like better range, but like lower cost. So if it gets to a point where, their cars are so far ahead and so far cheaper, in terms of specs, so far better, but it's so much cheaper. So where do you see the other automakers? Like right now, Q3, they just released a record-breaking production and
deliveries.
Yeah. So they grow like 50%. But the other automakers like General Motors, Ford, Flat, and all that, right? I think their sales actually dropped.
Yeah.
So what's happening here? They're relatively Tesla is snatching market share. So these companies, other automakers like General Motors, Ford, they might face like issues down the line, like it might go bankrupt, merge, or they might need to license the software of Tesla. Yeah, so the people still don't see. They still think like, hey, it's a matter of time before the big companies like General Motors, they just come out with better,
similar EV cars.
I don't see that happening. It's just like, hey, when Nokia realized that Apple was doing the iPhone, the smartphone thing, hey, Nokia can also do what? But why didn't they? So it's not as simple. If you think on it from that line of thought, you realize things are not that simple. So I'm open to it happening, but I don't see it. So Tesla, one of them, and maybe also C Limited. So C Limited, I think it's a parent company that has 3 subsidiaries. So mainly the shopping marketplace component, which is Shopee, and then the online gaming, Gamma, and also upcoming is the digital payment component. So I think these 3 are very well positioned for post-COVID environment. Like people like online mobile gaming, the cost is low. It's very scalable, right? Then Shopee also obviously. So this company is very well positioned, especially in Southeast Asia, so they are positioned in Southeast Asia, and I think in Southeast Asia there is still so much more room for it's still in terms of the online e-commerce space in Southeast Asia. I would say it's developing, or like there's still so much more potential. The potential is scary, right? Although you can say, hey, the share price is so high, but I still think there's still a lot of upside to come.
Okay. Great. So I think to stop there first, I think like I love how I think with just your 2 stories about Tesla and Garena, right? People are like, wow, shit, like if I invest in just a stock, right, don't talk about options, right? I just wait for the next 5 years, I know what, because it's not just the company that's pretty solid, which they are, right? I think both the founders, right, Forrest and Elon, they're pretty solid, but the sector itself is bound to grow, right? E-com, gaming, and fintech for
the tailwind,
and then and clean energy for Tesla. Like in the next 5 years, invest in it, you shouldn't worry. So that's great. So thank you so much for sharing openly, right? So I also have those positions. I also love those companies as well. Like how about like some dark horses, right? Like you think that people should watch out for it, right? Not enough people are actually talking much about this sort of company.
Okay, so this maybe one company that I'm quite bullish, I think is so I think most people know this company, but they don't think this company might be that bullish, and that company will be Zoom. Right now we are doing so everyone use Zoom, but not a lot of people are talking about it as an investment, thesis, not as a stock. We talk about Tesla, but not on Zoom. So I think Zoom in that sense, right, is still very, very dark horse, very underrated.
Which has actually went damn high, right?
A lot of people is not factoring correctly their future growth. So like every time, so everyone knows like Zoom, everyone is using Zoom, so people already price in the analyst estimates and all that. But like for example, the last earnings, they actually went up 40% because they beat.
It's crazy.
So I see it happening for the next 3 quarters because total addressable market is like so huge, and a lot of people still think Zoom is just a video conferencing software, and they have no mode. That means like anyone can do sure, Google can do one, Google have one, Microsoft have one, anyone can do one. But it's the same as saying like, Facebook is just a social networking website. Anyone can do it. Amazon is just a online shopping place. Anyone can do it. But everyone is using Amazon. So right now, everyone is using Zoom. Makes sense. So I would say there's certain kind of competitive advantage they have. Whether you like it or not. And there's so much more spin-off that can come out from it. Like right now, it's just a video conferencing software, but they're adding so much more new stuff already. So previously, Amazon, like it's just people just look at it as selling books online bookstore. I understand. But no one will ever thought they can go into cloud, they can do logistics, AWS, and all that. So same for Zoom. I think there's still a lot of upside potential that might happen.
Yeah.
Yeah.
Do you think they might even expand not just to video comms, but like something else, like I don't know, cloud or I don't
Yeah,
know.
correct. So I think right now there was like working with like other a software company or other SaaS companies to tie in or integrate. Like for example, they want something like the chat functionality that's a bit like Slack. So I think they are working with which company to include it in, so that for example, if universities are going to do a Zoom classrooms kind, they can or if we are doing it and then we want to talk about one stocks or something like that, we can have a some chat that they can do it very nicely. Not just a normal chat box, but like more like.
Because right now it's very simple. Right now it's like only the meeting itself has the chat, right? But next time, like let's say we are in the same group, we can extract from the previous chat and then to go through it.
So all these
Oh
add-ons
wow.
to like they will integrate that. So I think there's still a lot of all these things coming up. Yeah. So and also right, the longer we are entrenched in this COVID situation, the more this Zoom is a new way of life. Like for example, even someone invent a new vaccine tomorrow, okay, go back to normal. Next time I want to meet, I will just Zoom you lah. You know what I mean? It's like easier also.
The introverts will love it lah.
Yeah. So there will be a certain part of it that will still stick regardless. Like a lot of people are still, it's just a short one-time thing, once I'm given a vaccine, everyone will go back normal. No one will use Zoom anymore. I don't think so. I think it's a new way of life. Yeah.
It's like the not so dark horse, but it's kind of dark because a lot of people think that the wave might be over for Zoom, that it's just going to be like that. Yeah, because I Zoom I invested in like way back before the COVID, right? So I sold it all the profit. But right now I'm like, shit man, if I held it, who knows? But I think that's something I'm going to read a little bit deeper about their expansion plans, right? Because I know that they're a strong company for sure, right? But I think I want to read a little bit deeper. And so thanks for sharing that as well. Yeah, wonderful. Right. So anyway, thanks, Ming. Like, I think this has been a really productive and solid interview. I think our audience is going to love it, right? So any last words for the audience right now? It's October 2020, right? Like for the guys watching, I think a lot of them are going to watch it in the next couple of days. So any last words for them, right? I just want to close this off this session. And lastly, where can they find you? I think that's something that a lot of them will be interested in.
You can find me on Facebook, social media. So you can find me on social media, Ray Ming. My handle is Ray Ming Investor. Or you can add me on Telegram. I think maybe you can.
I'll put the links. Yeah.
On my Telegram channel. So sometimes I share just my own thoughts or what companies I buy. If there's some interesting stuff, I will just share that. I try to give as much value and help other people as much as possible. Last thoughts will be any beginning investors or you just started and then you don't know if you're on the right path. I would say don't focus that much short term. So a lot of people focus on, like for example, right now we're October. So people over the next 1 month, definitely there will be a lot of news about the election and all that. Yeah. So that might not be the best focus. Over the next 1 month, I will know what is happening, who won. Yeah, but more of like that won't be my attention and focus. I'll be focusing on the companies that I have. Are they still, like Tesla, for example, my top companies, are they still keeping up with the production numbers, which they are? So these are where my focus should be. Focus on the companies and have a plan. So right now, you are worried about election because perhaps you don't have a clear plan. That means you're afraid that election, if it goes on, then great. But if the market drops, then you might be
What is your plan?
Why are you scared? Because you don't have a plan for if it drops, right? So why not just think this, So let me perhaps preempt you. That means if the market were to drop leading up to election or after the election, in case there's some surprise result and the market will drop 20%, what is your plan? Your company dropped 20%.
Yeah.
What's your plan? Will you be entering more? Will you hold? Because you can kind of like play out the scenario before it happened. So a lot of people don't do that. But if you already played out, then you realize you take out a large chunk of the fear. Yeah. So it's about having a system, keep it mechanical.
And perspective.
Then I think so. It's not very easy, but and it should be easy that way. Once you get to the way of doing it. So it's not exactly rocket science here. I think the good thing about investing is you don't have to be very good at maths, you don't have to be good at finance and all that. You can have your own full-time job in a totally non-finance field, all right? But if you just put a bit of time here and look at the long term, don't focus on short term changes, look at long term, you will do very well for your financial portfolio also.
Wow, hey, I love it, right? So I think thank you so much, Ming, for sharing that. I love because you really have a system, so it makes people be like, okay, let me just kind of follow it, understand the rationale, and then just execute on it, right? And they can be confident that the profits will go long term. And last one about Ming, right? I think he's very humble. He don't talk so much about what his chat is about, but he really shares about some of his live trades, the exact stocks he's looking at, his exact thoughts on the market. So free most of the time, right? So I think you can check out Ming if you can. I think he's someone who is really
to
worth checking
join
out for
my
his.
Telegram channel lah. If you guys, it's free.
I'll put in a link. Yeah. Okay. So with that, thanks guys. Thanks, Ming. Right. See you guys soon for the next interview.
Thanks so much
All
for
right.
inviting me to share. All right. See you, Mark. Okay. See you.
Bye.
Bye.